So in the overnight session, for the most part, the market has been balancing within Friday's range. And heading into the open, the main question is going to be whether we now get a successful breakdown below Friday's low and below initial support, or given the fact that the market is quite oversold, are we now going to get responsive buyers stepping back in, and from here the market can reverse back up into the initial resistance zone and possibly even higher. So given that the market is deeply oversold and we're at this short-term inflection point, our intermediate and bigger picture bias is going to continue to be bearish, but our short-term bias is going to be neutral, and that means that we have to remain flexible and open to the market moving in either direction. Early in the session, how the market behaves at the 38.51 to 53 pre-market support and the 38.36.5 to 46.5 initial support will help us determine if we're really dealing with a very weak market. And in order for the market to put in a big breakdown continuation move, we would need to see signs of initiative selling in real time. So in order for us to get an intraday bearish confirmation, we would need to see a breakdown below initial support on broad market weakness and big and sustained downside momentum, and simply a lack of downside momentum at these areas of support can attract responsive buyers. So if early in the session we're noting a lack of downside momentum and buyers are holding ES above the pre-market support zone, then that would be a sign of stability and there would be potential for an intraday bounce. On the upside, we have aggressive resistance at 38.60 to 63, followed by the pre-market resistance zone at 38.68.5 to 76. Sellers can be active there, but keep in mind that the pre-market resistance zone only really works on the short side if we are noting a lot of weakness in real time, and there is still potential for a breakdown below Friday's low. Above pre-market resistance, we have a pocket of resistance at 38.83.5 to 86.5, followed by the initial resistance and bull bear zone at 38.96.5 to 39.06.5, and we would need to see broad market strength and sustained upside momentum in order to get a successful breakout above initial resistance, and a break and hold above that area would be an intraday bullish indication, which can result in a move up into the open gap at 39.19 as well as the resistance at 39.23 to 31.5, and a break and hold above the 39.31.5 area would serve as an intraday bullish confirmation, which can then eventually bring the resistance areas above into play. So that is the market context and plan heading into the open. Again, our short-term bias is neutral, and we are going to have to see how the real-time situation shapes up and how the market behaves at the pre-market and initial support in order for us to determine the intraday bias. So that is the plan heading into the open. Let's see how the real-time situation shapes up and how the market deals with the pre-market and initial support zone. That'll help us determine the real-time intraday bias, and we'll take it from there.